Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of May the 7th, 2018. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, the dollar has seen a very strong rally over the last few weeks here. A number of different factors, a dovish ECB, a lot of really good data coming out of the US. But in the past, or at least in 2018, that hasn't really helped the dollar very much at all. Now, the key vantage point levels coming in for this week on the dollar index are 91.08. You can see that we have staggered resistance here going all the way up to 94.30, but the dollar has actually finally turned positive on the year, meaning essentially from January 1st till basically a couple of days ago, the dollar has been below its yearly opening price, so quite bearish, but it is on the move now. But the indicators from VantagePoint are only cautiously bullish. We can see that the medium-term trend is losing strength here. So the question now is, will the dollar be able to move higher? You can see I'm looking at this from a 9-month time frame. If I come back in after the non-farm payroll number, now what I will say about the non-farm, even though we had a dovish Fed, the non-farm payroll number really was a good number in my respectful opinion, 3.9 on the unemployment rate, but more importantly, we moved all the way down to 7.8 on the U6 number. The U6, the broader unemployment, it's showing very, that's the strongest number, guys, since 2001. So it really doesn't get much better than that. So it's a question now whether people will warm up to buying the dollar, but again, we are in a very overbought condition here. So what this dollar rally could do is push the equities lower. So we want to watch the 2685 level very closely on the S&P 500 next week. Again, in my respectful opinion, if the dollar does continue to rally, that will put further significant down pressure on the equity markets. So we'll see how this one plays out. Right now, the S&P 500, we're just pushing above that key vantage point level at 2657, but at the closing price of 2663, I will point out the S&P 500 is negative on the year. So if you bought the S&P 500 on January 1, you're actually down money. So keep that in mind, guys. The S&P 500, it's getting more and more difficult to make a bullish case for this. Now, it doesn't mean the equities won't go up, but for the equities to push higher, we need that dollar selling off. Now, when we look at gold going into next week, gold is a big player for us in the Forex market here, guys. That key level, while we're bearish, we have found a bottom here, a very significant bottom, I might point out, at the 1300 level. A break of 1300 will see the dollar potentially extensive gains in the US dollar if gold can break down below 1300. But if it doesn't, then we're likely just to go in and continue to follow the same cycle we've been on a month-over-month basis, where the dollar sells off at the end of the first week of the new month, so on those institutional flows. So we'll see again how this one plays out, but 1300 is absolutely the number to watch on gold next week. Light sweet crude oil still pushing higher, but it's some headwinds up here around the $70 per mark. But we've had a big move up here. We're closing 69.72. VantagePoint calling this long on oil, just a fantastic move here. And this started again way back at the beginning of March here. We've had a couple of retracements, and then those retracements were used to push oil even higher. So once again, multiple retracements here against that key vantage point pivot area. That's coming in at 67.48. So oil still carrying a very bullish tone to it, which is perfectly normal at this time of year. Now, if we look at the Euro-US pair, it'll be a very interesting week coming up for the Euro. Be careful of a false break to the downside on Monday here, guys. We have significant support at or about this 119 area. We're closing 119.58. If we lose this support zone in here, the euro will see further downside pressure. But once again, when we look at some of the indicators from VantagePoint, this pair is heavily oversold. Doesn't mean it can't go lower, but the likelihood, again, is if gold holds 1300, then look for Euro US to at least retrace back to the key vantage point pivot area between 120.39 and 121.37. Now again, a very oversold condition on this particular pair. Very similar with US Swiss franc. We have a heavily overbought condition. We're losing momentum here to the upside. We've got staggered resistance again up into this 101, 102 area. But again, the further we move away from the key vantage point long-term crossover pivot area at 98.15, the more likely it is we're going to retrace to it. When we look at the pound dollar going into this week, 134.50, 135 area, this is a big level, guys. This was the breakout point, but it's also the bottom part of the range and right near that yearly opening price. So if the dollar breaks down below 134, that could trigger a significant move lower, but I'm not convinced at this particular time that that's going to happen. These moves are, you can see that they're very predictable to some degree. So right now we're coming into the bottom part of this range. Order flow traders are going to watch this area very closely. And once again, my concern here is the amount that we've moved away from that vantage point key pivot area, the long-term crossover, at 138.53. The further we move away from this number, guys, the more likely it is we're going to retrace to it. We can see here the medium-term trend is starting to weaken, meaning that we could see a reversal here, and we're also in a very heavily oversold condition. So be careful on Monday with this one. We'll see the real price on the pound dollar likely come midday Tuesday. Now, with the dollar yen this week, 110 continues to contain any rallies here. But again, in my respectful opinion, the medium term crossing the long term predicted difference in the opposite direction is what pushed this pair lower. Now we are on Friday, we have come down and tested 108.59, the key vantage point pivot area, and we've bounced off of it, closing at 109.10. So this particular pair is still in a bullish formation here, but the indicators from Vantage Point were very accurate in calling this what appears to be, at least right now, a corrective move lower. If 108.59 holds next week, then we'll start to move back up again and probably take another run at that 110, 110.50 area, but we need to break through this area, guys. You can see I have two lines drawn in here, one basically around 110, and then again up at this 110.50. If we break through that, then we've got a real shot of pushing back towards that 112 area. Now, as we come into our main commodity currencies here, with a very bullish signal on oil from Vantage Point, this actually, the intermarket correlation is very positive for the Canadian dollar. So I would look for one more push to the upside on Monday, and then I can see US Canada reversing lower. Even though the dollar may be strong across the board, the Canadian dollar will feed off of that also, and it will also feed off of the fact that oil is bullish. So we've got very significant resistance here at the 129.40, 129.30 area. Vantage Point, you can see that I've tagged this, the medium term crossing the long term predicted difference. We haven't been able to break through here since that medium term cross. The predicted RSI is again falling, but a break of 50 and more importantly a break of 60 will see this pair accelerate to the downside. Right now my year-end, well, not so much year-end target, but towards September, August, September, my particular targets on this would be back down in the 122, 123 area. So potentially a very good short opportunity here. If we look at the Vantage Point short-term crossover, it's trying to complete here, but we have a very tight channel. So if this area around 129.30 continues to hold, this pair will move lower in the days and weeks ahead. Now, as we look at the other two commodity currencies, these two are absolutely in trouble. What we want to watch with Aussie US and New Zealand US is the equity markets. If the equity markets sell off and gold moves lower, Aussie US and New Zealand US will plummet. So what happens with stocks next week, guys, very, very critical to these two particular pairs. So when I look at this right now, the key vantage point level 76, we're showing some strength here with the neural index, but the RSI, basically a dead cat bounce off of that trend line I've put in the predicted RSI. It's mildly bullish, but it appears to be a retracement, not so much a new trend. So I would be very cautious with this pair, but again, watch your equity markets very, very closely. Same as New Zealand here, guys. We've got a bit of a base forming here at 69.80, but a very weak one. The key vantage point level here, 71.27. We've got a very mixed bag here with the neural index and the predicted differences, but the predicted differences measuring that medium-term trend against the longer-term trends, saying there could be a little bit of strength here, but it's really going to be up to the dollar next week what the US dollar actually can do here. Can it actually break out and hold above its yearly opening price and stay positive on the year? That will be the sign of a new trend here, but at this particular time, my optimism on that remains heavily guarded. So with that said, this is the Forex Weekly Outlook for the week of May the 7th, 2018.